The US only publishes CPI numbers once a month, which are presumably an indication of inflation, and it seems that inflation is becoming worse by the month. Stocks are suffering as a result of the Fed's continued need to react by raising interest rates. What is going on? And are we about to enter a recession? Let us investigate. Hello everyone and welcome to Wealthy Wisdom. In this video, we're going to talk about, are we heading towards a recession? If you're new to this channel, do like and subscribe to the channel. Let's first define a recession and when it occurs. Is Drake the one who determines whether we are in a recession? When the GDP or gross domestic product goes down for 2 quarters in a row, this is often called a recession. GDP is a commonly accepted metric that nations use to assess the overall worth of their goods and services. As a consequence, when GDP grows from quarter to quarter, it indicates that the economy is doing well. When GDP declines from quarter to quarter, it serves as a warning sign, since it indicates that the economy is beginning to contract. As previously said, if GDP falls in 2 consecutive quarters, we are officially in a recession. The National Bureau of Economic Research, or NBER, has just altered its current forecast. They have some say in whether or not a recession is declared, but only if the economy falls drastically for more than a month. For example, despite the fact that there had not yet been 2 consecutive quarters of decreasing GDP, the NBER had declared a recession in March 2020, when lockdowns were in effect. The intriguing fact is that the recession was the shortest ever recorded. When was the last major recession? The most recent, though, occurred in 2008, during the height of the financial crisis. Most of us in our 20s were still relatively inexperienced at that time, so we were not quite old enough to comprehend what was going on. As a consequence, the one that after that, which is most likely this one, was unexplored territory for all of us at the time. The US GDP fell by 4.3% between its peaks and troughs. While this may not seem to be much, it is apparently the largest loss in GDP since the post-war era. The Great Recession began and stock markets fell by a startling 49% during a 16-month span. Subprime mortgages, in which banks made loans to anybody who wanted to buy a house without regard to the person's credit score, were largely to blame. What exactly is a recession? And when was the last time anything like this occurred? What just occurred? Although many market analysts and recognized CEOs such as James Morgan and Jeff Bezos predict a recession, the NBER has yet to formally announce if we are heading towards a recession. This time, it's due to the markets acquiring much too much liquidity to survive the previous 2 years of global lockdowns. Yes, we needed a push to survive at the time, but ultimately, there was so much money moving about that the economy effectively overheated. As soon as the constraints were lifted, people began to travel and buy a lot of items. Firms made a lot of money and the economy began to overheat as they paid out more money and stocks began to climb from 2020 until the end of 2021. Surprisingly, although economic development is something we all want, it cannot happen too rapidly, since it would cause the inflation we are now seeing. As a consequence of the overheated economy, inflation has risen once again. When monthly inflation exceeds 7%, it is no longer considered normal, and the central bank begins to act naturally by raising interest rates to try to control it. As I said in the last video, when interest rates rise, both individual and corporate expenditures fall. Hopefully, this will result in less spending, allowing the economy to slow somewhat. They aim to lower inflation at the end of the day. However, on July 24, 2022, the United States announced that headline inflation had reached 8.6% year-on-year, the highest rate in 40 years, following multiple interest rate increases in the preceding months. In response, the Fed immediately raised interest rates by 0.75 percentage points. To reiterate, the fact that this is the greatest shift in interest rates that the United States has seen since 1994 indicates how desperate the Fed is to control inflation. Many investors expected a 0.5% increase, which is why the market has suffered in recent weeks. However, once the inflation figures were released, everyone recognized that the Fed needed to raise interest rates even more. Many others, however, feel that the US must experience a recession in order to stabilize inflation. They think that if interest rates are raised quickly, inflation will be fixed sooner rather than later. You may have observed that I am only referring to the United States in this line. We are all aware that the United States is an economic powerhouse and that if it has a recession, other countries will suffer as well. Businesses are starting to fire employees and others, like Coinbase, are revoking job offers before the men take them. Is it time to panic? If you like this video, don't forget to like and subscribe to the channel. Let's continue to talk about whether are we heading towards a recession? The first thing to grasp is that similar to how stocks and cryptocurrencies have ups and downs and go through bull and bear markets, recessions are completely normal and unavoidable. The same may be said about the economy. This will surely happen to us at least 3 times in our lifetimes, despite the fact that it is a tough and unpleasant experience that none of us want to have. In reality, recessions seldom last more than a year. Despite lasting just 16 months, the 2008 Great Recession was the country's longest slump since World War II. I realize that 16 months seems like a long time to you. We don't want to keep seeing your baggage plummet, and we don't want to see firms fail, resulting in 16 months of layoffs or decreased employment. It's been a long time. These hard times are in no way comparable to economic peaks. The shortest cycle of economic expansion we've ever had lasted 12 months, which is almost as long as the greatest recession after World War II. For example, the most recent economic growth after the financial crisis lasted 129 months, or more than 11 years. So for those of you who are worried if we are heading towards a recession, since this is your first time, all I can say is, don't worry, because this is also my first time. On a personal level, the night always comes before the day, and the economy will eventually recover. In my view, the most important thing that any individual should do with regard to their own finances is to save for rainy days. These are the occasions when rainy day funds really shine. Many say that carrying cash alone reveals the impacts of inflation, yet when all is said and done, cash remains supreme. We will not use Bitcoin or Amazon stock to pay for our rent, food, electricity, and other necessities. People will only take cash. We still need it, even though its value is dwindling. In the worst case scenario, let's say we were fired from our jobs. At the very least, this rainy day money will help us get by. I hope this doesn't occur. If you want, you can put this money into extremely safe investments. So if you have a 6-month or 1-year rainy day fund and have this covered, you can start investing because in my opinion, these are fantastic opportunities for us to double our wealth. I'm not sure when things will stabilize, but they've taken a horrible battering recently, with numerous high-quality stocks down more than 50%. On Monday, June 13, 2022, almost every stock in the S&P 500 was in the red, which is a very rare condition, considering that the indexes are only down 20 to 30%. This is rare since there are always winners in every market situation, even inflation and recession. Because of the high price of oil, firms in the oil and gas industry will continue to thrive. However, I believe investors book out and sold every stock they had owing to the concern of increasing interest rates and high inflation rates. According to their charts, the S&P 500 stocks recently fell over a cliff so fast that our eyes couldn't even see it. They were seeing an unusually unfavorable mood in the stock market, as shown by 2 consecutive days of gap downs and the ensuing gap down day. As in the well-known proverb, buy when there's blood on the streets, even if it's your own blood, which we often hear people chant. As I previously said, we never know when the bottom will be reached. So just begin dollar cost averaging. And, do it every single week or every single month if you have the extra cash. However, I would not encourage you to go all in because billionaires are created during bad markets. I would probably invest more money during this period. One thing to consider if you're one of those individuals who wants to sell everything and then buy it back after the economy improves and we've escaped the recession, etc., all I can say is that it is not a wise choice. Because the stock market often bottoms out before the economy, despite the fact that inflation rates remain high, the stock market will gain this time rather than decrease, as we have seen in the past. This will be especially evident in high-quality shares, which will be ready to rise as soon as the bull market restarts. This happens because investors are very efficient and foresighted, and as soon that they perceive signs that the economy will begin to recover over the next 3 to 6 months, they will begin pouring money back into stocks. They're only plummeting now because there is so much uncertainty. Investors hate uncertainty, and we don't know if the Fed can keep inflation under control. So in my opinion, we are about to face another recession in 2022. Even if the term recession is only a formality, economies are presently deteriorating. People are being dismissed, job offers are being rescinded, and assets are being sold arbitrarily. At this point, the only thing left to do is survive. Try not to be too clever with your money, especially when it comes to investments and rainy day reserves. Keep contributing to your rainy day fund if you know how to invest and have the money. We've reached the end of another video, and thank you for watching. I hope we answered the question, are we heading towards a recession? If you like this video, do give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.